following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour on this 10th day of May. My pleasure to be here Monday through Friday, 11 o'clock until noon. And what's really important about today is that within the context of that move above and below the 20-period exponential moving average in the Dow, we're above it. And that's going to be very important. So let's just run the numbers. And of course, thank you to our hosts all the way through until this 11 o'clock period. And we're going to be continuing all the way through today being Tuesday, all the way through to the 5 o'clock, 6 o'clock hour with Andy Hecht. So you've got programming right through, and we hope that it benefits you. Let's look at the Dow. Well, we look at the futures right now, up 16.75. Remember that very large arch formation that I was talking about in the 120-minute chart of the E-minis? Well, it went down to 2030, just above the left side low bar in the 29s. And what happened is we had a very sharp spike in the E-minis starting yesterday. And you went to peak A, peak B. What's the objective of the Chapman wave methodology? Is to try to get you to a D from a most identifiable low bar. And so that was peak D right there, 2105.25 back on the 20th, 21st of April. And now what we've done is come down to 2030, and that was the low of the 6th. And now we're looking at peak A, B, C, and leg D in a left side, right side price time match, which says that you've got until about 4 o'clock on the 11th, till tomorrow, to make the 2077.50 area. That's number one. Number two is, within the context of the move down, because there's a cup formation, it says that you can look at the upside as giving credence to at least further testing with 2663 as the near-term support. Let's see, that's 8 points lower. And if that breaks, then we're going to look at something completely different. But in the meantime, upside buys, at least for now, but it is leg D. It means you've got to start being a little bit careful in the E-mini. Now, let's just go to the nitty-gritties of what we're looking at here. As I do this, I'll run the numbers, and I will spend a little more time when I'll come back to the Dow. Most importantly, what we're looking at here is within the context of the daily, weekly, and monthly. I don't have the E-mini monthly very much data. So let's immediately go to the Dow. INDU, the dollar INDU, 17,870 at up 164, having hit 17,580, the low that was made 3 days ago. And now what we're doing is we're looking at a gray, I call it a gray, leg A to the upside. And that says, because you are underneath, quite a bit underneath the previous high of 18,167, until you break that level, this has to be called a retracement failure mode. That's not a negative, it is explanatory. It just says that this is where you are. Okay, now I'm going to quickly do this. One trend line right there on the highs. And that says that the Dow could very well bump into 17,950, 960 even. That's 90 points up from here. And that's where we're going to see is this going to be, yesterday, I could have switched from our short Dow position to, we still have we have a short position on the Dow, 1-to-1 short. Got taken out with a little bit of a gain on our 3 times short. It was a much bigger gain, but you know what? My thinking was that this was the bounce we were expecting. I needed to see where this particular vehicle was taken out, where we would like to re-implement it, if the pattern that I'm going to look at in a moment pans out. Meantime, you've got this W and a couple of really great email questions yesterday. I am still behind in the emails. I hope to be able to, by tonight, to have it all repaired. I'm getting some. It's sporadic. I'm not sure quite what's going on. So let me just be real clear. This W formation starts to fail if the Dow takes out 17,500 to 17,400 support. My thinking is that that whole lower 17,000 is going to be major support in this particular move, because at some point we will make a new recovery high and then an all-time high. And a recovery high would be above 18,167, which would start leg D in the weekly chart, and that monthly chart is still looking very strong. Okay, and I had a couple of questions, really good questions. Questions were basically, why did I not switch to the long positions? We did have a long position, which worked out quite nicely. We had a good few percentage points profit, but we could have had a much bigger gain if I had switched early Monday morning just from the short side to the long side, and that was it. Or even on Friday, I could have done that. I'll explain my thinking in a moment, but just to say that this W formation in the weekly chart with the MACD still strong, stochastic still at 88%, is something I have to take into consideration. It would not, for my subscribers, no, they know, because I try to trade the Chapman wave techniques as much as possible. I would not have any problem switching to the long side if I see that this move is actually going to take us now into the 18,167 to challenge the all-time high. I just don't think of it as being able to do. I don't think there's enough power right now. We'll come back to that. Now let's just do the S&P, SPX.X. I'll do them all right now before the break. So this is leg D that went to a trough D. Once again, D's are where you look for reversals. This is what we got. So the S&P is up 18 at 2076.96. And now here's the trend line that I'm going to draw right there. Make it nice and simple, just touching the tops right there and there. And that says the S&P could, in fact, go to 2083 area, and that's where we'll be looking for some kind of a reversal. The weekly chart would make a leg C at 2111.06, just above peak B. So after 16% rally, you would expect time, maybe not so much price, but time, and that's maybe what we're getting. QQQ series, the QQQ series up 86 cents at 106.74, the NASDAQ NDX trading vehicle. And at this particular point, you got at 106.74, you've got a lot of resistance between 106.90 and 107.50, so right there. Let's go on. And the weekly chart is not looking all that great. If I look at the gold, GC, now it's going to be very interesting. I'm of the opinion, I'm going to change this plus sign to a down arrow because there's a sell mode in place in the daily. Weekly chart is still looking great, but it is a peak E potential with the MACD and stochastic still good. And that says, I drew in the rectangle formation, says you could go down to the low 1200s. That's going to be the real test for gold. Meantime, we're looking at the dollar, DXY, and the dollar is holding very well. It's down 5 cents at 94.07 in leg A. The 120-minute chart says, hey, it could pull back to the 93, even to the 93 area, maybe even 93.80, but at 93.82, the 9-period exponential moving average, somewhere in there, I'd expect to see a bounce. And let's just go to the TLT as the break comes up. Leg C has begun in the TLT. It's up 16 cents at 131. I'll be right back. Basil Chapman, Tiger Technicians Hour, and we'll look at crude oil. We'll look at some other things as soon as we get back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So let's go through a couple of things here. Actually, I need to do this because I almost forgot about it. I would have forgotten about it by the end of the show. I need just to tell Jim, I did get your email about the DZZ, etc. I've sent you an email a couple of times, but it keeps being bounced back. I remember this has happened before with your email, so just be aware. In my opening call, I've got these things down. We'll be dealing with them over the next couple of days. The other thing, I'm not sure how to get through to you because of that email blocking, but I did respond, and that's an instrument that does work, even though it's light. The only problem is getting out. But if the trend is your friend, it's not a problem at all. Okay. Now, here's another thing. Addie, I haven't had a chance to, I will hopefully this afternoon listen to that from the email, the information that you gave me. It looks very interesting. I do not know the artist. That's number one. Number two is I will be getting out when we're going to go back into that short position. And I'm going to show the charts in a moment and talk about it. One other thing was, yes, now looking at the crude oil, the question is, this is the summer season. This is when there's the most driving. I've got this outstanding legs peak C that needs a peak D in crude oil. I'm just wondering if crude oil is able, because the weekly chart is still very strong, unlike gold and silver and copper and some of the other commodities. This is a little different. You remember I spoke about crude oil as being something I'm looking at it in a little bit of a different light, even though it's part of the commodity package. So it's a real good question. Is this a rally at 44.23.29, up 85 cents in the crude oil continuous contract that is going to take out the high of the 29th and go above 46.78? Nice question. I for some reason, I just kind of forgot about the summer traveling. I had thought of it recently, and then it just kind of went away from my mind, mainly because I was looking at the commodities as being a little bit vulnerable here, certainly the metals, after a spectacular move. It's just time, maybe more than price. So here, this is what I'm looking at. within the context of crude oil, daily chart and weekly chart, is it appropriate to be going short is really the question, long or short. Just make it as simple as possible. Because of the question and the way you posed it, it made me think very seriously about looking at the weekly chart. Let me show the weekly chart in a much greater time span. Now you'll see that these letters kind of miss. That's because this is a continuous contract. It gets smoothed out. For the next month, this is the June contract. So these letters, everything here is absolutely legitimate. They've just slipped a little bit because it's not an automated Chapman wave notational system. So in the meantime, what we're looking at, let me put this right back here, is that down arrow all the way at the top, that was in the week of the 27th of June of 2014, we have just smashed to the downside, just bounced along. Like it looks like a slalom down to the bottom for those of you from Colorado that ski a lot. Zhoosh, down, bounce. Finally, a little bit of flatness. And now that's the flatness that's important. I'm kind of with you, Julie. I think you're correct. I think there is a chance that crude oil, maybe a little bit more than some of the metals, crude oil as a commodity might be independent enough since it's had a huge decline that maybe you're right with the summer traveling. So I'm going to say this. I would not be looking to short crude oil. I had looked at some of the short positions over the last couple of days, decided just that's not worth it right now. But the big question is, can there be a rally more than to the 47, 45, 200 period exponential moving average in crude oil? And my answer is, I would say yes, based on the monthly chart, and I'll tell you why. This is a technique that I developed a long time ago from my CD introducing the Chapman wave methodology. You will learn that the longer that the MACD can hold flat, either at the bottom or at the top. I don't mean coming down like this. I mean above 80%. And flattening out, like here at 90%, the greater the chance of support with bounces to the upside. And it doesn't say they have to be big, but it just says there's a real good chance on the weekly chart that there will be a peak C. No. There will be a leg C, about 46.78. That's on the continuous contract in crude oil. So now I'm putting it together. I'm saying, okay, what are your risks? What would I do at this particular point? I'm going to suggest that the relationship, I know you've said that the relationship of the USO, but it's a trading vehicle we've got. It's the same as the UUP. It's really not one of the greatest things. It acts okay with the dollar, but it's not great. But it's the best thing you've got. So I'm going to make the suggestion that if you want, because the stop can be so tight that you look, maybe you don't want to trade, maybe you just trade the futures. And if you're trading the futures, then I'm going to suggest, yes, you could start a long position here. And I would use my 120-minute chart to say right now, so that went to a D. See, this is the way it works. Very nice. G/C in an alternate count. Finally, you get to your second D, down arrow. And now we're looking at the potential for a bounce. So this is what I'm going to say, that the USO trading at 1086, I wouldn't give it much, and I'll tell you why. Because at 1086, if you take out 1086, 1072, wow, I think in a vehicle like this, 15 cents, it's a big percentage, but it's really just a small thing. You can't do very much less. I would have a trading stop of 15 cents, and I would be going long right here. And I say, hey, show me, because you've got an outstanding in the crude oil continuous contract. You've got an outstanding wave that needs to be accomplished. Doesn't have to. It should be accomplished, but you have accomplished it already in the USO, the United States Oil Fund, and it has pulled back. It is showing some support. The technicals in the daily aren't that great, but they will improve, and the weekly chart is really showing some nice strength. So yes, there you are. So that's the trade. Fairly tight stop, 15 cents. You can even make it 20 if it's a small position. But I would add to it if it can take out 15, the high of the 6th of May, because that should immediately tackle 1124. And that's the way I would do it. Okay, I would rather add with strength than the moment it takes out and starts leg D in the crude oil. That's when it takes out the high of the 29th, in this case 1150. If it does that, then your core position I would raise to a decent level of I'd raise it to maybe 1098, and your trading vehicle I'd have a trading stop on some part of it ready to take a profit, because it could easily hit that crude oil could hit that 47.50s resistance area. Hope I did that. I wanted to spend a little time on it because it was important. Now, the UNG. Now, we were looking at this yesterday, and it's a little problematic in the sense that I think it was Greg was looking at it, and he was in the. I was looking at UNG. I believe he was in the UGAZ. Did I get that right? UGAZ? Were you short or long? I think it might have been long. Yeah, I think it was long. So if that's the case, it's looking good at 25.63. I'll have to refresh myself on that. I'll be right back. Basil Chapman, Dow's up 153, S&P's up 16. Going to be very interesting. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I'm just finishing this up. This is White Wave WWAV. And this is really interesting because look at that beautiful chart. It was doing nothing. And then all of a sudden, it just took off. And it's looking great. Hit the 200 period exponential moving average. I love these moving averages. Hits the 200 period moving average. and then bam, it just starts moving using the 9-period moving average instead of a repellent zone, a propellant zone. That's the weekly, and here's the monthly. I used to have this all notated because it was a favorite at one point. I don't know how, I just don't understand how these notations disappear. I do know that they're there somewhere. Let's put it that way. So this is an instant restart in the monthly chart. Someone was saying the other day, they don't recall seeing all that many Chapman wave instant restarts in the monthly. I said, that's because it takes so long for them to occur, but they absolutely do occur. Look at that perfect instant Chapman wave instant restart. Remember yesterday on the show, I was discussing the Chapman wave instant restart. This is very good. And this is saying to me that this White Wave Foods Company. Now, I think they suppliers, so this is very good. And what this says to me is that within the retail business, there are a bunch that the clothing retail part of the apparel is not doing that well. If you look at Gap, but if you're looking at some of the other areas, retail is still working, and that's going to be very interesting. So we've just had a gap up to leg D. You wouldn't be surprised if there's a bit of a consolidation, but this is very bullish action and says that the weekly chart should go to, doesn't have to, but it should go to a leg D. Yes, another one is HIN, Hain. This is one that was on my list, and I thought, all that underwear and stuff. Hain Celestial. Oh, no, Hain Celestial. This is not Hain, the underwear. This is Hain. This is the spices, I think. Yeah. So let me just check. ABC. Is that correct? Someone tell me while I'm busy putting in the notation, so I can do that as well. C, D, A. Gosh, look at that. Just a tight move to the upside. D, E. And all of a sudden, you've got your A and your B. Oh, this is very good. This is very nice. Hain is acting very well as well. HAIN up 48.35, and WWAV was up 235. Must have had a good earnings report or something today. It's at 44 round number. Hit a 44.85 high. So it's pulling back a little bit. All right, so this is that rotational aspect. Organic food. Oh, it is organic food. Okay. Wait. White Wave is organic food. Not Hain. Hain Celestial Group, thank you. Manufactures, markets, distributes, and sells organic and natural products. Oh, in the United Kingdom, Canada, Europe. It's grocery product, United States. Okay, got it. Thank you very much. So it is different. All right, underground, not underwear. Right, we're looking at the down at 165, and I'm going to do a couple of things here. I want you to just take a moment. I want you to talk about the dollar, DXY. Just there are a couple of things that I find very interesting. Within the context of that monthly chart, you remember we spoke about this, that the dollar could make this double U formation. And if that's the case, it has no choice at this point. If it even a hope of making that pattern, it's got to, because it took out on a monthly chart formation. It hasn't closed underneath the low of 92.63, 92.62. That was August's low, but it has started this second cup formation, and the MACD is not good. Stochastic is lousy, but it is trying to attempt a bounce, and that's going to make the 95.72 9-period exponential moving average just something. What it really is that it has to go to the 96s. Only in the 96s, another 2 points up from here, can I even consider that this is the move that's going to take the dollar back. And if it does that, gold is going to have a much longer timeout. So I'm watching this because the gold and silver strength is phenomenal. We've never seen. I remember getting the bounce at 44 from the XAU back in 1999, 2000, I can't remember. It made that low, and then it started this great move. But those stocks took a little while to do the kind of stuff that they're doing now. So that is intense buying pressure. So as it stands right now, the dollar and the gold relationship, where they can go together maybe 4, 5, 6 weeks, maybe twice a year, maybe 3 times a year. Most of the time they're trading in counterpoint. you would expect that gold in leg A, with a very strong technical picture of stochastic at 74%, MACD still good, that at 1261, it comes down to the low 1200s. 1203 is the 9-period moving average. I'm suspecting it's going to take time, maybe more than price even. It's not going to be a sudden cascade to the downside, although we've seen that over the last couple of trading sessions. But in fact, looking at the chart, realistically, that spiral from the low of 1040, well, it's a continuous contract. No, this is at 1047 back in December to the high that was just made, 1047 to 1306. That's 200 and something points. That is huge. So you can expect some kind of give back. All right, and that's all I'm saying. And as it does that, we'll see if the dollar is able to garner more than counter trends a bounce, if it can even move in relation to the EUR USD. I want to do that as well, because the euro just made a peak E and is pulling back just like gold, and it's made a peak D in the weekly chart. So all of these are saying they are ready for some kind of a pullback, but the technical picture says that it shouldn't be more than a technical pullback. I don't see a crash coming in the euro-dollar currency pair or gold or silver. I just see a fairly regulated technical digestive phase. Hope that clarifies that. At least my thinking. All right, here we go again. I wanted there was a question. Where was that question? Oh, yes. The question was, within the commodity index, TRCCI, that isn't such a big move in the monthly chart. When you put it into the context of where it's come from, no, it's not. Even just 2 bars of the rally from June to July of 2012 did more than what we're seeing now. I prefer the concerted effort at this particular point in the commodity index rather than to have spiked sharply higher for a couple of months and then kaboom, turn around and go lower. So this is going to be this digestive phase, I'm calling it, in the rotational correction is going to be very important, because at 403 up 2.99 in the equal weight Thomson Reuters continuous commodity index, this is going to be very important, because the 200-period moving average at 415, 416 hasn't gotten there yet. It's gone to 409. It hasn't gone. It needs another 5-6 points, and that's going to be the big test. Can that support now turn into some kind of resistance, or could it break out and turn that former support that became resistance back to being support again? That's going to be the question for me. All right. Dow's up 174, S&P's up 18, hardly giving back anything. I'll be right back. Let me show you the 10-minute chart. I'm expecting a leg D to go above 2072.75 in the E-minis.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, we're back. So let's just do this. We're going to run Amazon, AMZN. Amazon having a real good rebound. Is this a recycle? I'm going to have to call this a recycle. A, B, C, D. This is leg C. Oh, look at that. This is leg C in the weekly chart, but in fact, it's leg E in the monthly. Oh, look at that. Please, I didn't even look at it for the last couple of days. That is very strong action. Amazon, okay. So Amazon, I am going to call that new leg C in the weekly. I'm not going to give it an alternate count just yet. There's no need to. Everything's in place. 93% stochastic. MACD is good. And in fact, I should give it an alternate count here as possible D/B, but I'm going to just go with the B for now. I'll deal with that if there's any change because of the V-shaped pattern in the stochastic and MACD for that low bar. And I am going to put in a new plus sign. That says that you cannot get a peak in Amazon. If I'm correct, this isn't a D going, that's a down arrow. This is the beginning. That would be A. Ooh, wait a minute. It would be B, C. Oh, isn't that interesting? Give me a second. This high here was at 603.24. This is a 604. Oh, 406. Oh, no, it kept going higher. Okay, that's fine. So, yeah, there could be an alternate count, but this is just saying to me there's strength. Just be careful. There's strength there. We want to look at price line, PCLN. Price line is rallying. It's got to fill the gap. It doesn't look good. It looks bad, in fact. Facebook. Facebook trading at 120.02, up 78 cents. It's got that rectangle formation that says within the 120-minute chart, there should be at least a peak A, peak B, peak C, and then a D. Let's just check and see if that works. So this will be an up arrow. Let's call it this one here. So we're going to go to an A, a B, C, D, E, and a possible F. All right? So on a short-term basis, it's an alternate count, but it doesn't matter. The 120-minute chart in this formation is very important. Why? It's something that I talk about a lot when we have these gaps to the upside. How it's filled is very important, and very often the way it's filled is to go within a shorter time span to have a Chapman wave inside buy mode that goes peak A, B, C, and D, that goes to just about the exact high, and that was at 120.79, just below or just above, and then come back into the rectangle, test a key support, in this case that would be 119, the 9-period moving average, and that's the big test, because if it fails from there, that whole thing becomes the pattern that I look at, which is called the H formation, like that and like that. So this is very close. That means I really shouldn't be too bravo about that. Amazon, I have to give it an alternate count. But now what we're looking at is that Facebook is still one of the leaders of the pack. It's not showing tremendous strength today. It's up 0.64. The Dow is up 1%, and the S&P is up 0.87. So it's lagging a little bit. And I think it's just going to fill this in. This can go a little bit above and then start some kind of a pullback. And Netflix, NFLX. Whoa, terrible. Looks very poor. Having a problem. So even within that little Dow that NASDAQ quartet, we've got 2 strong and 2 weak. How about GE? Nice candle today, up 43 cents. It was horrible just for the last couple of days. Good candle. That's a good sign of strength. Up at 30.29, up 42 cents. The weekly chart is improving. Maybe I'll have to go back to calling it an F/C. We don't have any position, but as an indicator, this is a good sign. Let me just move this 120-minute chart away. And then what I'm going to do is real quickly, I'm going to go GE, IBM, the Chapman Wave Dow Quartet. IBM acting well. It is up 2.15 at 149.53. I wonder if IBM is in play. I have thought about that a lot. And the chart formation and the news formation and everything about it says, IBM could try to go to the 160s. If that happens, that'll start leg B above 153.52, and that would make 162.81 the 200-period exponential moving average target. So we'll follow IBM, Triple M. Nice action today, 142 at 169. Oh, wow. Look at that. The weekly chart is close to starting a leg D above 170.77. I tell you, this is a very good sign of strength. And the UTX is another one, up $1.60 at 101.61. No, it's not so good. It's just beginning to fall, hitting the 9-period moving average. It did make a recovery high at 107.07 on the 27th of April. So there again, too good, too not so good. Actually, GE, I'm going to say today is good, but as a pattern so far, it's not really. UBNT, a question in the den by PR. UBNT is ubiquity. When these companies come up with these fancy names. Yeah, and weekly chart is looking very good. Monthly chart is okay, but it's the daily chart, that gap. It just says to me it's a little bit overbought. ABC starts again, ABC. It has a Chapman wave overlapping D, and that goes to, you know what? Ubiquity, UBNT at 37.64, down 10 cents. I think it needs to do a little backing and filling. I wouldn't be surprised if the upside at 39 is kind of 38.80s is kind of the limit on the upside, but the downside says to me it could be testing the 35s. Yeah, that's the way I'm looking at it. It's good action on the weekly. It just seems to me to need a little bit of a digestion after such big moves. So that's that. Okay, I want you to look at done that. XLE. This is the energy sector. So it made a peak D. I have to put in a down arrow in the daily. The weekly chart is still only at a C. I'm putting this into the category with the oil. I'm going to see how this holds. XLE Energy, so at 65.11, up 79 cents. That's good action on the day. That really needs to get to 66.50. If it gets, someone remind me, if it gets to 66.50, to have another look at it. That would be a good sign of strength. So when I'm looking at the XLF, and this is going to be very important. Oh, nice move. It was only up 10 cents earlier. Now it's up 23.36, up 29. It's like the oil. It's like that same pattern I have in crude oil. Can it get to a leg D? And I'm putting this D question mark. That's going to be important. So as it stands right now, it's got weekly strong resistance. It's at 23.35. Very strong resistance right about 23.75, and it breaks out at 24.10. This is going to be really worth watching. So in terms of getting back to the short side, sorry. This is the pattern. I meant to spend some time on this. Let me open this out nice and big. Let me just have a look at the Tiger TV to see how you're seeing it. I think you'll be able to see it clearly. If it's not, I'll even open it up more. There. If you look at the May, 1 year ago, the May 19th high, all-time high of 18,351 in the Dow. You see this red, thick red line? This is the 20-period exponential moving average. Within that context, look at those candles that came down and then had a bounce. Of course, I'm never going to be able to find that little switcher to stop that beeping. I haven't been able to figure it out. All right, you see the way the market then went and treated that as resistance, but in the November pullback, it slammed against it and pushed higher. It went a little bit higher, but didn't take out the high of 17,977. Then started its move to the downside. We'll talk about the relationship of where we are as soon as we get back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So let me just continue this because I had a bunch of emails. I'll get you right now. In the November decline, there was a very sharp decline of about 9 bars, and then there was a spike to the upside, and we ran to the upside for about 4 bars. We've only had 3 bars, so 2-bar turnaround, and including where Friday will be 3. So I'm suspecting that we can go to the Dow 17,950s, even the 17,980s. And then I think we start to turn down if the pattern is going to match. And then it becomes very choppy with lower highs and lower lows. That's the pattern I'm looking at, unless this is a breakout and we're going to all-time highs. Not all-time highs, new recovery highs in the down the S&P, which could lead to all-time highs. But this is the pattern I'm expecting to be repeated. Third time, it doesn't always happen 3 times in a row. We'll see. So I must apologize to subscribers for not. And yesterday, my Chapman Wave Trend Gauge flashed a signal that said there should be an E-mini move overnight within the next 2 days. That's 9 to 11 points high, and that's exactly what we got. Let me move this out the way here. Nothing there that I can see of. Leg D in the 120-minute chart. Okay. Now let's do this real quickly. OIH, a question about the OIH. OIH is made a peak E-top in the daily chart at 30.47 on the 29th. It went down all the way to 26.43. Big move, but much bigger move to the upside. So this says to me, is this like crude oil? No, I think that this is a little different. This is going to have a more difficult time. So I would not be going long the OIH at this particular point, even though maybe it's going to turn out to be a good move. Let me look at the 120. You know, if you're going to go long at 27.13, just put a stop under 26.43. That's 60 cents, 70 cents. That's the safest way to do it. If it is 27.88 on the 9-period moving average, that's a really good sign. That'll help the weekly. It's just that the weekly pulled back a little more than it should. So it says to me it could take time. That's that. IYT was a question. IYT is the transportation index. Nice bounce. I'm just treating this as a bounce right now. It's up 121 to 139.96. The XAL, which is the airline index, and boy, those airlines, you don't get your booking within a second. It could change. It could change in hundreds of dollars these days. It's so quick. That's the way they do it. So this is a peak G that was made in the XAL. Very sharp pullback. I don't see anything yet in the airlines, and this is what's saying to me that this is a move that really is closely matching the Dow chart that I showed you, that it should fail within 70 to 100 points in the Dow and then start to move down. Then a final question was, a final question is the VIX index. Let me just do that. VIX.X. The VIX is down sharply. Man, I tell you, this is buying pressure at 13.76, you know, below the 15s. I say it's buying pressure, down 81 cents. And that concurs with what we're seeing. And the weekly chart is showing no strength. So just to make it really simple, the VIX index in the 13s is suggesting there'll be waves of buying. There could still be more buying. The big thing is, will the VIX index test the going to the 12s? Or is it really close to some kind of reversal, making a choppy format here that I could even call an oval pattern, a reverse, there we are, an oval pattern that in fact might have one spike to that inverse Chapman wave stork leg formation, might have to have one spike below 1250 and then whoosh, it starts on the upside. I don't know. I'm looking at the VIX. I'm just giving you the daily thing. If the VIX by the end of the day, because the market starts to pull back, Dow pulls back 80 points from here to just plus 100 by 3 o'clock, and the E-minis and the S&P is up 19, is only up 13. I'm going to sneeze. Excuse me. Then that's something else going on. But in the meantime, I think that the turnaround comes a little later in the week, and then we should see choppy lower highs and lower lows. All right. So, yeah, my engineer says, Dave White sneeze. Yeah, but Dave White sneezed. So, folks, stay tuned for all your shows today. Great programming coming up. I'll be back later on with Tom O'Brien. Have a wonderful day. I'll see you tomorrow otherwise.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.